Market analysis now by Arthur Karras, who's a senior portfolio manager at Old Mutual Investment Group, MacroSolutions. He joins us from our Cape Town studios now. Arthur, it's good to have you with us today. I'm happy to see the market performance matching the corporate colors of Old Mutual, green, optimism, but yet we're nowhere near above the 50,000 point levels that we've seen earlier on in the year. I take it your view on the current market situation and the nervousness. Is this calm short-lived?
Well, we think that the weakness that we've seen in the market is not unexpected. We've had a strong performance out of equities in the last couple of years, and at the same time we're now in much less certain economic times. We've got one of the biggest drivers of economic performance, the Chinese economy slowing down. We've got the US talking about interest rates, so it's hardly surprising to us that the market's taking a bit of a breather.
Let's touch into some companies now, and two that are quite prominent in the news, Sibanye as well as Amplats, both expected to make an announcement tomorrow here at the Johannesburg Stock Exchange. Your view as to what this might entail, as well as the timing of a potential deal between these two mining companies?
It's been part of Amplats' strategy for the last, I think, more than a year, that it wishes to dispose of its high-cost, highly labor-intensive operations to allow it to focus on its higher-grade, more mechanized businesses where it can bring more of its expertise to bear. And the difficulty there has been trying to sell those operations at a time when the platinum price is weak. So in fact, they'd made so little progress that they in fact were considering the possibility of simply listing those assets separately, which would just have pushed the ownership of those assets to its parent, Anglo American. So it wouldn't really have solved any of the issues they were trying to solve. On the other side, we know that Sibanye believes that it can bring those assets to account. It's got a lot of expertise in running deep, low-grade, more marginal operations, but it would be very careful about the kind of price that it pays. So what we don't know is that exactly what the deal entails. We know from Thursday's cautionary that they're talking about the Rustenburg operations. So that probably means they're not talking about the Union operations, which is another similar type of mine. We don't yet know what it includes in terms of concentrating or smelting capacity. It's really important if you're going to be in the platinum game beyond a certain scale to have at least some of your own concentrating and potentially some of your own smelting capability. And I think that's the kind of detail that we simply don't have yet.
I'm glad you clarified that, because we do look forward to that announcement tomorrow, where more details should surface following the announcement. But just as a sidestep, in your view, is this the beginning of potential consolidation in the mining space in South Africa?
Well, I think what we need in the platinum space in the short term is less supply. So all the mines have recovered from their strike from a year ago with trying to push as many ounces through their system as possible to try and generate some cash to catch up on that period of no production. And that's pushed additional ounces into a market that simply got too much supply. So what we're seeing at the moment is a fair amount of supply coming into the market. So what we're ideally hoping for over time is that the producers are more careful about producing ounces that they don't produce any profit, and that they grow a bit more prudently into the demand picture that's out there. In terms of consolidation, I think what you're seeing is the constant reorganization that you see in the mining industry. The larger mining houses don't want to own the marginal assets. They don't want to own the short life assets. They want to own things with scale that they can focus their attentions on. And that means that you're constantly going to see this move of mining assets to different kinds of owners who are not afraid of running the high labor intensive operations, who are lower cost in their approach, and you can still generate a profit out of those mines.
Arthur, if we take a look at a company out with numbers today, Steinhoff, managing to post fairly impressive numbers across the board, and the share price also responding quite positively. Are you optimistic on this large industrial player?
Well, I think I'd like to point out a few things about Steinhoff first. And the one thing is the sheer scale. I think at the close of business today, on a market cap basis, Steinhoff is bigger than Anglo American. It's one of the largest companies on the JSE. It's one of the largest retailers in the world. and its core focus area is the discount value retailing business, mainly in the kind of furniture, household goods type businesses across Europe, where you've got a very fragmented furniture industry, and Steinhoff is consolidating that. The astounding part about this result is I don't really know many management teams that could have undertaken the sheer number of things that Steinhoff did in the current year. So they bought Pepcor, which in itself is a huge deal. It changes the nature of Steinhoff completely. It's only in this set of results for 3 months, so it's still going to have an impact on the company going forward. In addition to that, they bought out the minorities in JD Group, made an offer for the business of Iliad, another listed South African company. They topped up their stake in PSG, bought back some of their convertible bonds, issued some other European bonds, some other European debt instruments, and are planning a listing in Frankfurt. So these are not people that are afraid of work, and the group is constantly evolving. So you really have to be on your toes if you're going to stay on top of this one.
Arthur, if we turn our attention to the local currency, though, unfortunately really coming under strain as an emerging market currency and representing a commodity exporting nation as well. But I take it we might see the benefit then being offset by company earnings which have operations offshore?
Definitely. As I've pointed out before, a large amount of the JSE consists of businesses that are in fact not even active in South Africa, whose primary businesses are no longer South African. So by investing on the JSE, you get access to that. And what we are seeing is an enormous amount of money being spent by South African companies who are seeking to internationalize operations. The South African economic outlook is quite tepid, so corporates are looking elsewhere for growth. They're looking for it in Africa, and they're looking for it in the developed world and in emerging markets.
Arthur, thank you so much for your time today and analysis of the local market space. That was Arthur Karras, who's a senior portfolio manager at Old Mutual Investment Group.